All right, thanks everyone for joining us this afternoon for a introductory presentation on Bitcoin investing through IRA and 401k accounts. More generally, qualified retirement plans. We will be covering mostly centric to Bitcoin, but also other cryptocurrencies as well. If you do have any questions, please make sure you do type them into the chat box, as I have muted everyone else's audio, so no raised hands will be addressed and no audio on your end will come through. So please type them in. I'll try to get to as many as possible, but I do imagine that we will probably have quite a few questions, as there certainly will be more questions generated throughout this presentation. My name's Alex Perney. I will be your moderator and presenter today. I've been with Advanta going on 6 years now, with direct involvement in completely non-traditional qualified plan retirement investing, everything from real estate to foreign exchange to private placements, and now getting into the realm of cryptocurrencies as well. We've seen pretty much everything and have experience with it, and are looking to essentially help you and guide you through what you're looking to invest in. Centric to today is the new trend in investing in alternatives, be it through cryptocurrencies. All my direct contact information is up there. If you think about a question afterwards, feel free to shoot me an email or call me directly. I'll be happy to answer them. We're always happy to look into new things and new creative ways to help you save for retirement. Now, as always, we cannot strongly stress enough that with any type of investment you're doing through a qualified retirement plan, that we do not provide tax and legal or investment advice, nor do we endorse any products, especially the ones we'll be covering today. All the information we're providing today is for educational purposes only, and we strongly encourage you to consult with your attorneys or other financial advisory services before making any type of investment, to make sure that it's a good fit for you, as some of these investments, especially what we're covering today, can be very highly volatile, and the potential for loss can be strong in those markets as well. So now, with the disclaimers out of the way, I want a few points to really resonate with people today. The ability of me to present this information to you well really kind of boils down to making sure that there are certain things that you take away from today, not just a broad scope of things that kind of leave you with more questions than answers. So the first thing I want people to understand and take away today is, what is a cryptocurrency? A lot of people hear the term Bitcoin, maybe Ethereum and other things being put out there in the broader marketplace, but aren't exactly sure what they are. We want you to make sure that you understand the basics of what a cryptocurrency is. We'll be focusing on Bitcoin today, but just understand that cryptocurrencies in general will be the main topic for the point today. The basic functions of buying Bitcoin and cryptocurrencies. So, now that you understand what it is, how do you go out and purchase it? You don't go down to Walmart and pick it up like a gallon of milk. How do you go out and purchase it? How is it held? What do you do with it after you've essentially acquired some of this type of asset as well? And how they work. Essentially, this is not a $5 or $10 bill that you hold in your wallet and give to the clerk or give to a vendor when you utilize some type of good or service. This is a completely new and evolving type of marketplace with how these types of virtual currencies and virtual means of transacting actually occur. So understanding how they work after you've purchased it, besides just sitting there and looking at where the market is trading on these things, is very important as well. So what are the cryptocurrencies? What are the basic functions of buying Bitcoin and crypto, and how these currencies work after you acquire them are the three things that I want people to really take away from today. Just a little bit about us. We are a nationwide provider of these services. So if you do want to pursue these types of investments through a qualified retirement plan and get the tax advantage savings of either having the tax-free growth of the value of these types of investments in your account, we can operate anywhere in the United States and anywhere in the world, really, so long as you have access to an internet connection and either a cell phone or computer. We can make these kind of things work within your investment structure for your qualified retirement plans. So what is Bitcoin? Essentially, this is a new form of trade. Essentially, it is the establishment of a new type of currency and a new way to trade across borders and different types of of platforms that allows for people to more directly deal with each other across much broader expanses of not only land but cultures as well. So the basic fundamental of Bitcoin is that it's a self-regulating platform that doesn't rely on any type of central bank like a federal depository or a large system of national banking in order to control it or actually place a value on it. The inherent basis of this is that the users of the Bitcoin and by larger extension cryptocurrency platform self-regulate the actual platform of the currency to make sure that it is, one, stable, two, ensures that there are no double spending of any type of unit, so to make sure that everything is kept honest, and three, to create the platform's longevity to actually be a viable type of transactable currency or assets with regard to a broader scope of e-commerce. Now, with regards to that, it's kind of a lot of big words, but the IRS has actually addressed this. So, they have to look at it from the perspective of how are we going to tax this and how are people going to hold this? They specifically addressed this in 2014 with a special publication 2014-21, where they go through a lot of specific questions as to identifying how these are going to be looked at from a taxable perspective. And the ultimate determination is that the IRS says that they will treat it as personal property. So it is looked upon as an actual asset, not as currency in their eyes. So it cannot be used necessarily to satisfy public debts. You can't necessarily pay your tax bill with Bitcoin no more than you could pay your tax bill on gold bullion. So they look at it as personal property, not actually as a currency. But the good thing for that, especially when it comes to investing through qualified retirement plans in order to gain tax-free or tax-deferred growth with these types of things, which are extremely fluctuant in value, and especially in the trend recently of going up in value, is that you can invest in tangible assets through a qualified retirement plan. If this was seen as cash, the only type of cash contribution that can be made to an IRA or a 401k has to be in US dollars. So this publication is really good from the perspective of that it qualifies the investment as something that can be pursued through an IRA. If you want to specifically look into that a little bit farther, it is addressed right on the front page of that. If you just search IRS Notice 2014-21, it is question 1, answer 1 of that circular that the IRS put out. So it's fairly layman's terms. If you want some additional information on the legal side of it, I encourage you to look at it. But it is really interesting that they have addressed this specifically to allow us to know how it's taxed and what types of accounts that we can hold it in. And essentially, it opens it up to any type of qualified retirement account. A little bit about the history of Bitcoin specifically, and to the latter extent, some of the other types of cryptocurrencies that are out there have a little bit more of a transparent background. But the interesting thing about Bitcoin is that there is some ambiguity about whom the actual original programmer was that came up with the system and the actual platform of Bitcoin. So in 2008, there was a publication made to a internet circular under the name of Satoshi Nakamoto. There is some debate as to whom actually was the real person behind this publicist, whether it was a single person using a pseudonym or a larger group of people, but essentially it brought up the prospect that built upon several now defunct cryptocurrency platforms of a self-regulating, fully transparent currency market that would utilize the actual users in a peer-to-peer network to self-regulate and verify the transactions across the entire platform. So in 2009, the first blockchain was actually established with regards to the initial offering of the Bitcoins on that network. So that essentially established the platform for people to say, okay, there are Bitcoins here, some address holds it here, some address holds it here, but the platform in order to exchange those was initially established in 2009. The interesting thing is that the exchange rate of US dollars to Bitcoin back then was significantly less than even a cent in conversion of US dollars to Bitcoin. currently, I checked before this presentation, Bitcoin is roughly converting to a US dollar of 1 bit equaling $4,221.96 per bit that is actually held. So kind of interesting to see the immense growth of the exchange between the two, 2009 and now. So in a matter of 8 years, how much rapid growth and acceptance of this platform has been seen. Interestingly enough, it took until 2011 for Bitcoin to trade on parity with the United States dollar, so 1 bit equaling $1, 1 US dollar of value. And 2013, if you look at the trending graph, is typically when it's seen as the rapid rise you have from the mid $30 to $50 range to going over 100 and really not going back from then. Okay, looks like we have a few questions. Let me just scroll up momentarily. Okay, Jack asks, are you going to cover the recent July 2017 ruling that indicates digital currency will be treated as a security? Not particularly. We want to see more to come with regards to how that's actually going to be implemented before we kind of get into doing educational information on that. With it being only a month out, the IRS, when they identify publications, it's kind of hard to see until they actually go into effect and you have people actually either challenging or changing policies and procedures to look into really recent rulings. But I'm sure we will be doing a follow-up to this actually with regards to questions and other items. So I'll be looking out for another webinar in the coming future as to some follow-ups with this, maybe on other specific types of cryptos, as well as how this new rulings is really kind of affecting the marketplace. So some things about why people utilize this. Why has it been adopted? A large thing is that with regard to the time that this actually came out, there was a lot of general dissatisfaction and sentiment towards the established banking systems of what people had been using for the past hundreds of years. And with the incredible economic downturn that we saw, people looking for some different type of platform to transact commerce with. You have the blooming industry of e-commerce with people like Amazon.com and large platforms by Walmart and large companies transitioning from a brick and mortar to an e-commerce platform. Well, why wasn't necessarily we were still using the old banking system when we have people that are looking towards making a new digital platform to utilize with regard to this new commerce platform? And that also factored in with the economic downturn of why people were actually utilizing this. So people have warmed to the idea that the decentralized system that's self-regulated by its own market can actually be a viable platform. And it has proven as such with the advent of being able to fully audit the system, because it relies on self-auditing in order to be a system that has the transparency for people to transact across the platform. Another big proponent of this is the ability to remain anonymous and protect your personal information. Whereas with most of the time using credit cards and everything's online, you have the ability for your information to get compromised. Whereas with this, you can remain as anonymous as you would like to with regard to the actual titled ownership of your Bitcoin wallet. Bitcoin addresses are just alphanumeric instruments that are used to identify the actual holder of certain amounts of bits. So you do have the ability to remain completely anonymous, and unless you are actually disclosing to the end user, vendor, or platform that you are sending it to, you do have the ability to say, I want to keep my name and other personal information off of these transactions. And also the ease of payments to individuals without the need of banks. You can be someone that lives life according to your own set of values and rules, and if that does not involve necessarily utilizing publicly accepted forms of banking and you want something else besides just holding cash and other things, this is another option for you to actually take on and use instead of a more traditional banking aspect. We have a question. I read that Bitcoin was hacked recently. How safe is it? With regards to how safe is it, the actual platform of Bitcoin being self-regulated, which we'll get into in a minute, is that every single transaction has to be verified by the open network in order to actually be confirmed by the blockchain that is being edited. We'll get into blockchains and what they actually mean for the cryptocurrency, but with regards to that, it has proven itself to be remarkably safe in that every single person knows where every single bit back to the original point at which it was mined has been spent and where it's gone to. That's one of the beautiful things about this, is that you can literally trace the bit that you hold all the way from the time that you held it to the time that it was originally created. And let's say yours was one of the first ones that were originally created back in 2009 and 10, you could see where it went from each address going back and forth throughout the public and audited blockchain to exactly where it came from, and see every single different address in between yourself and the originator that has ever had it. So that's one of the interesting things, is that you can trace it back, and you can also make sure with that system that it is not double spent or essentially has been sent to two different people, because the system regulates and finds those errors. With that said, there is an inherent risk to anything. Banks get hacked. Large companies can get hacked. With regards to that, it's just a matter of how much risk you're willing to take and how much research you're willing to do into the platform that you're exposing yourself to. John asked about the issues with criminal activity with it. It's really no more different than looking at it from the perspective of cash payments. Essentially, people do see that a lot in the news, that there is an inherent use for that. But with cash payments, you have the same amount of anonymity as you would with a digital cryptocurrency. I would say with regards to that, with the amount of electronic paper trails that are out there and the ability to backtrace things, there might inherently be a little bit less, but individual mileage may vary with regards to your opinion on that. But essentially that does boil down to a personal opinion. We're just here to present a broad scope of facts on this and to educate people on how this would work, particularly with regards to investing in their own personal regards to qualified retirement plans. Some other attractants to this is the business and international aspect to it. International business can be conducted much quicker and cheaper than the use of centralized banks that might actually charge you high transaction fees or actual management fees for having your services with them, such as check writing fees, depository fees, and other type of things that would initially eat into your margins, especially with regards to foreign exchange rates. If you're operating on a Bitcoin basis, you're not having to worry about taking losses with the also fluctuating foreign exchange markets. You're actually being able to base it simply on what the accepted value of the Bitcoin is, or by more extension, what the actual cryptocurrency is based on in its own market. The other interesting thing is, you're avoiding things like wire fees and a lot of other things that can typically add up very quickly with regards to international business. There are inherently processing fees that are going to be charged by Bitcoin brokers, and there might be a basis fee that's charged by a wallet provider to you as well. But typically, these fees, from what I have seen, at least in my research into the platform, are significantly less than what traditional banks would charge you for the same type of service. You can also reach more people across greater distances by accepting Bitcoin payments. With the advent of personal computing and the ability to have much more wide-ranging use of the internet, people in countries that maybe don't have as well of established monetary system can utilize cryptocurrencies in order to be more globally involved with their neighbors, either close or far, by using something that helps them exchange with them. Someone may not have the ability to hold traditional cash in a country that is maybe in a more developing world, or that is looking to get a bigger basis in the world, but can use the internet and Bitcoin to help secure their finances and use it to trade with other individuals and businesses. So it does create kind of an interesting future for the ability of people in developing nations, or people that otherwise have stayed out of global commerce due to different banking regulations, or maybe that just don't have the ability to access the world on a global scale. So it is certainly bringing in interesting future possibilities to this. So getting into the key components of Bitcoin, and by more extension, actually cryptocurrencies in general, most of them operate on a relatively similar platform as to Bitcoin. Bitcoin is kind of the initial proponent of a lot of systems that have helped people get more involved with it, and when they're writing new code and new platforms, have adopted a lot of the security measures and audit trails that Bitcoin has pioneered and used very successfully. So the wallet essentially is where you hold the private keys that are essentially the encryption keys to the bits that you hold. Think about the wallet as a safety deposit box with a glass front. Everyone can see who the anonymous address with their bits is, how many they hold, and where all of those bits have come from. They don't necessarily know who owns it or anything about that the personal end user, but they can see exactly how many bits that they have and where those bits have gone and come from. So it's the really interesting part is that the actual bits cannot be released until you have two pieces. One, the address of where you're sending it to, and the private key that goes along, which essentially is the signature on the transaction going from you to the other end user, whether that be for goods and services or anything else really. I mean, there are places like Subway in certain areas that accept Bitcoin for payment. So you can use this for any number of things, but that's essentially how it works, is that your glass-fronted safety deposit box is what actually sends the bit out of it to the other user, and everyone can see in. So it creates the fully transparent system that allows this to work so well. Now, the blockchain is one of the really two main pioneering aspects of what makes Bitcoin interesting from the perspective of it being fully auditable and being able to see everything that has happened. So this is the publicly audited transaction trail of each Bitcoin that's spent, and it shows where it came from and where it went to. Previously, I stated that you can take any Bitcoin, look at it from the perspective of I'm going to track this through the public blockchain transaction ledger back to where it originally came from. It shows everywhere that it went, everywhere that it was spent, and it also helps to avoid any double spending of this, because the blockchain is continuously audited by the users. And the initial rules that were established for this establish the process for how these are verified. So it's actually a fairly fascinating concept, and I am sure that I am by no means an expert on this. I am also a student of the cryptocurrency trend and learning as much as I can with it. But essentially, if you were to walk into the safety deposit box room, this would be the ledger that everyone signs into, and you can look back through everything for where every Bitcoin has come and gone. Now, in order to make sure that this is valid, the users on the system, or the miners, which gets into the mining aspect of this slide, go back and proof each single transaction to the previous block in that chain. So think about a chain, how it has links. Every single link that is added onto that has to include a proof of the previous transaction ledger to make sure that it is correct and nothing has been double spent. So every single transaction that went on in the previous link in that chain has to be confirmed and proofed into the next chain, which is a process called hashing. So it has to include a hash of the previous transaction ledger in order to make sure all of those transactions are valid. Validation also comes into play because when people trade in Bitcoin, there is inherently a little bit of a lag time waiting for the miners of the blockchain to confirm all of the transactions to make sure you have a verified transaction going to the person that you're sending the Bitcoin to. So that way that you're making sure that the Bitcoin that you are receiving is actually coming from an individual that actually has a valid claim to it, and it hasn't been double spent or otherwise duplicated. Now, this is also where new Bitcoin comes into existence. There can only be 21 million Bitcoin ever produced. So there's a finite number. So the scarcity of this product is also what helps it create value. Presently, we have mined roughly half of all of the Bitcoin that will ever be produced in this system. So the interesting part about that is that the reward for people going through and auditing this is more Bitcoin. And there's a specific schedule that sets out how much each time a new chain is added and verified, how much that person gets. Now that decreases until there is no more Bitcoin available to actually be given as a reward for mining. Now, the mining process is harder depending on how many people are trying to verify these links. So the system actually creates mathematical problems that have to be solved in order to proof the actual chain, and the first individual to do that and post a verifiable chain to the network is the one who gets to collect the reward of more bits. So it is a incentivized program for people to qualifying. Sorry, let me get this out right. It is a system that rewards the transparency and validation of every single transaction by having people out there that actually verify these transactions and are rewarded for their participation in the system. So not only is it self-regulating, but it's actually self-promoting in that it brings more people in that want to be involved in it that can actually verify the transactions on this network. We have a good question from Carol. Is there a list of companies that will trade in Bitcoin like real estate companies? Typically not. Keep in mind that you are going to treat this as an asset. Whether or not that the personal asset is changed to something more of a security-based, as the IRS has is in the process of changing some regulations on it. You're looking at this still from a tangible perspective. This is not cash. It is called cryptocurrency, but it isn't necessarily currency in the traditional sense that I can go use this and it is backed by a country's either good faith or specie being a precious metal backing. It is an asset in the truest sense of the word. So with regard to people like real estate companies accepting it, if you found someone that wanted to exchange something on an exchange basis saying, I will give you this good for that good, sure. But I would say with regards to going to a closing to buy a piece of property, you're not going to be sending Bitcoin to the closing company in order to purchase the property. But I'm sure that there might be different companies that would accept Bitcoin as forms of payment for maybe a private placement or other type of unregistered security, sure. With regards to a list of companies that do that, I honestly don't know. It was something that I would encourage you to further research, and if you do come up with something interesting, send it over to me. I'd be happy to take a look at it and further my information that I have and collect on the subject. So bringing up this, it is a currency or an asset. Although Bitcoin, Ethereum, Litecoin, and other things are referred to as currency, it is treated as an asset. It is either going to be a personal asset or treated as some type of security, but you cannot use this for the basis for contributing into a qualified retirement plan. We have to have the ability to properly value, and with something like this that has a verifiable exchange rate, it's relatively easy for us to look at. But this is an asset through and through. So you have to purchase it with US dollars out of your qualified retirement plan. You can't use it for a basis of making your $5,500 or $6,500 contribution into a plan on an annual basis, or potentially higher contributions depending on where the money is coming from and what type of plan that you have. So as with any asset, we have to have a readily identifiable value, because our responsibility as an IRA administrator and custodian is to make sure that we are properly reporting values to the IRS on an annual basis, so that way you can have a compliant account that gets to enjoy all of the tax-deferred or tax-exempt investing basis that you want with this. So that's why essentially you cannot treat it as a currency for the purpose of contributions to a qualified retirement plan. Now, shifting gears a little bit, just so we can make sure people understand our basis for this presentation, is to kind of show people how this can work within a qualified retirement plan. So how it can work within your IRA or your 401k, things that inherently have good tax favored status with the IRS in order to be able to get great tax deferred gains with regard to the exchange of these types of cryptocurrencies to US dollars. Now, how do you get money into an IRA or a 401k if you can't contribute Bitcoin in there? Well, it's either going to come from one of two places, either a previous employer's 401k, 403b, or a governmental 457, some type of qualified employer-based plan, which you would move over via a direct rollover, or from another IRA, such as a traditional IRA or a Roth IRA that you would move over via a custodial transfer. One thing I always like to put out there is just remember there is a difference between these two types of movement of funds. Direct roller is direct rollovers are types of distributions, and they can only be done between, or they can be done between any type of plan, but you do specifically have to use them between an IRA and any of the plans listed on the left hand of this slide. So any type of retirement plan based with an employer, you have to move that via a direct rollover. The clean and easy way to do it if you have an IRA moving to another type of IRA is a custodial transfer. And as with custodial transfers, direct rollovers between custodians are unlimited, and they are not taxable, and there is no penalties. The only difference between the two is that one is reportable to the IRS with regards to how it is transacted. And keep in mind, you could do a custodial transfer or a direct rollover of an account that has Bitcoin in it, but that Bitcoin or other cryptocurrency has to be purchased with US dollars through that plan. So what kind of self-directed or other types of plans can actually be invested in this, and what's the ultimate advantage to using a particular type of plan? Well, excuse me. Well, it's a really good question and kind of an interesting topic to cover, and we will shift gears in a moment back into more basis of the actual cryptocurrencies. But with regards to how these are treated with regards to a taxable basis and what the ultimate goal might be to use one over another is really kind of an interesting topic in and of itself. So the traditional IRA is going to be what most people, I'm assuming, are most familiar with. It is by far the most popular plan on the market, for better or worse, and it is a tax-deferred growth plan. So that means that when you move funds into it from something like a 401k or pension plan, you don't pay any taxes. So it's all going to be growing with a deductible basis, meaning when you added money into that plan, either be it a traditional IRA contribution on an annual basis or when you were adding money in as an employer, as an employee of a business, you always got a deduction for it, meaning that everything's going to grow until you want to take money out, at which point you're taxed at an ordinary income basis. So the traditional IRA, you're not paying any taxes now. You're paying tax on the fruit that you pick off the tree. The Roth IRA has gained a lot of traction with regards to how attractive the distributions are from it. And especially when you look at the growth of something like Bitcoin from 2009 to present, where it's trading at over $4,000 presently, you have the potential to take something like that and never pay a cent of taxes on the profit that you're making on the investment in that type of account. Because the Roth IRA is a non-deductible contribution plan, meaning that you're not going to get any deduction for adding money into it. Essentially, you've already paid your taxes on that money. You're never going to have to pay taxes when you take that money out as a qualified distribution. What's a qualified distribution? You're over the age of 59 and a half. The account's been open for at least 4 years, and any Roth conversions, meaning that the traditional IRA having taxes paid moving into a Roth IRA, has also aged for 4 years as well. If all of those things are satisfied, your distributions of any type of profit are going to be completely tax-free. So an extremely interesting benefit to that type of plan. We have a couple different business type plans up here as well. The SEP IRA is really good for high wage earners because the amount of contribution you can add is based on your salary. So at a max contribution of $54,000 a year, which is based off of an individual earning $270,000 a year of income. So it's 20% of your income can be contributed into a SEP IRA if you have one of those types of plans. A simple IRA, a lot of different nuanced rules with regards to how money is added into that, but just understand that there is a employee and employer contribution into that type of plan. The employee contribution maxes out at $12,500, and the employer contribution can either be a match of that up to a certain percentage or a profit sharing contribution to that plan as well. Okay, Carol asked a really good question about the Roth IRA. Tax-free, including the increase in value on withdrawal for Roth. Yes. So if you purchased a Bitcoin, let's say back in 2011 for $1 at $1 per bit, and now it is trading at $4,221 roughly, every single amount of growth, whether you exchange that for US dollars and then distribute it or distribute the Bitcoin as an in-kind distribution, if you're doing it as a qualified distribution, so remember the account's at least 4 years old and you're at least at the age of 59 and a half, you pay not a cent of taxes. So good question, and it definitely goes to show how amazing the benefits can be from not having to pay any type of capital gains, either short or long term, So being able to avoid taking a 15 or 20% tax hit, or depending on how you're investing it, possibly even some ordinary income taxes that might be assessed to the sale of Bitcoin if you're doing it personally. So a lot of taxes can be mitigated by this. And keep in mind, if you're doing something and you hit a home run, I mean, you could be paying 39% taxes for some of this stuff. It could get pretty cumbersome pretty quickly with regards to doing this if you're not actually doing proper tax planning or not doing it in a qualified retirement plan. The tax savings by doing it one of those two ways is very great. Again, you can use your old 401ks, 403bs, or a governmental 457 via a direct rollover to a traditional IRA or doing a conversion to a Roth IRA. And last but not least, the individual 401k has gained a lot of popularity in previous years, because you have the ability to add in very high dollar amounts of your earned income. So you can take portions of your income if you're self-employed up to $18,000 if you're under the age of 50 and a half, or $24,000 of your pay, and place it into the plan either as a Roth contribution or a traditional deductible contribution, and you have the ability to add in up to $35,000 of profit sharing of the business into that plan as well. There are certain restrictions on the amount or the ratio of the profit sharing match into that plan. It cannot exceed 20% of the net operating income of that business, but there are great availability of high contribution plans that are out there for individuals that are looking to get money in to in turn invest in things like cryptocurrencies. Here's a snapshot of the current contribution limits for these types of plans. Two plans I didn't put up there, but I have them on the slide anyway. You could do it with it. You could do qualified retirement planning and cryptocurrency investing with is the education savings account and the health savings account. I left those off of there because they have much lower contribution limits, but they are tax favored plans that you can use for qualified investing, so deductible basis and potentially tax-free distribution investing, or just tax-deferred investing with regards to cryptocurrencies. Now, who can you buy this stuff from? You may know a friend, a neighbor, someone at your church or a civic group, or just someone you work with that has cryptocurrencies, that owns Bitcoin, that maybe says, hey, I want to buy some, and, I can just buy it from them, because there's nothing that says you have to buy this from an exchange market. You can go to your neighbor down the street if they sell Bitcoin and say, hey, I have set up a wallet. I want to purchase some from you. Here is $5,000, let me get a bit and a quarter, and they can set up the transaction and send it directly to you with all the proper information. Carrie asks, how do we find wallets? I'll get to that in 1 minute. But you do need to understand that you can go to many different people, but there are some people you cannot transact directly with. They're called disqualified persons from your retirement plan. These are going to be anyone directly up and down from you in your family tree. So you can't buy cryptocurrencies from your mother or father, your spouse, your son or daughter. None of these people you can actually purchase these types of assets from. There are potentials for individuals that you are engaged in a fiduciary relationship to also be disqualified as well. Those are a little bit more nuanced, and I'd encourage you just to give us a call and we can kind of run down potential scenarios of who may or may not be disqualified from you. But just understand that directly investing with people up and down from you in your family tree, generally with 99% certainty, is going to be disallowed. So good thing to understand. So use your personal network of people, research, or just go to an exchange platform that operates on the blockchain, and you can buy it from, anyone or large people that are holding this in order to sell. It's not a problem. You can buy it from just about anywhere if you get on there and have enough money. Okay, so Carrie, as I said, we're moving into how to choose one. Well, what I would say from the perspective of qualified retirement plans, utilizing one that allows for more of a business structure. So I would say someone that can actually title it correctly in the name of an IRA. I've done some research, and BitGo seems to be a good platform that will allow you to tell them exactly how you want the ownership of it titled, because what we're looking for when doing this in an IRA or a 401k is that the actual title ownership of the wallet is correct. So correctly done underneath of the name of the IRA, which we'll get into in a moment. So that's what I would tell people to look for, is that the ability of the wallet provider to give you the flexibility to name the ownership of it correctly in order for you to properly hold it in the name of the IRA. So another thing to look at with regards to choosing a wallet provider, do they charge a cost basis? Are they going to charge you a fee for actually the service of providing you a secure environment to hold the encryption keys or the security keys for your Bitcoin? Okay. Just one moment. I had a question just reading through. We'll get into your question here in a minute, Margaret. It's a good question, certainly. Thanks for the specific detail on it, but we'll kind of touch base a little bit on that with regards to it, so just bear with me for a minute. But things, again, to look for when choosing a wallet provider. The most important thing when doing it through an IRA or a qualified plan is making sure that they have the ability to do it in the correct name, because that's the name of the game when it comes to achieving tax-free investing or tax-deferred investing through this type of investment, is making sure that the actual ownership is titled correctly. Because if you go and open up go to a brokerage platform and buy the currency and put it in a personally owned wallet and then try to put it into an IRA, essentially you're not allowed to do that. You aren't going to be allowed to contribute this. As I said, you can't use a cryptocurrency as a contribution to an IRA. So making sure that you take the proper steps and opening it up with a company that can actually put it in the proper name of the IRA is a best practice. So, certainly give us a call. We're currently researching more people that can provide it to people that want to actually be invested in this. So every day my list is growing of people that I've found that can actually do it in the correct name. So if you're interested in it, give us a call. We can certainly help you with regards to that. Corey asked a good question with regards to the keys. So the keys are typically issued with regards to in triplicate. So you have 3 different keys to this. One is typically going to be held as just like a safety deposit box with the wallet provider. So you have to put in 2 keys in order to actually issue the actual bits from one address to another. The other one would need to be held by the individual holding the wallet. So typically, if you're opening it up, you would get a copy of it, but we would need to receive a copy of it as well. And then thirdly, almost always with a good reputable wallet provider, there will be some type of recovery service or offsite cold storage of a recovery key as well. So that way, if there is ever any type of issue with your home computing or the wallet provider, that you have a secured third party that can help you recover the information in order to have access to your wallet again. So it's a good question. The answer is that we essentially would need to at least have a copy of any type of encryption keys for your wallet, so that way we can properly record keep and provide the custodial services to that account. So great question. But in addition to that, there are many different types of wallet providers and different types of services with regards to how much security and how much of a service they provide with regards to offsite storage and things like that. What currencies will the wallet or exchange platform that I'm using exchange my cryptocurrency into? You might be utilizing a wallet provider that only deals with certain exchange platforms, because remember, the exchange platform that operates on the blockchain has to be willing or able to use your wallet provider. So most of the big ones out there, like BitGo and others, will typically work with a lot of the different big providers. Such as Kraken is big, KRAKN is a big exchange platform that works well across many different exchanges of currencies and wallet providers. So you have some flexibility to use there. But make sure that when you're looking at it, that you're utilizing a wallet platform that's going to be generally accepted. So I wouldn't necessarily go too far with the niche fringe or new stuff, but also make sure that you're using something that if they are charging you a fee, you're getting good value out of it. In addition to that, because your IRA would be responsible for paying any of those fees as well. So making sure your cost basis with regards to whom you choose for your wallet is a best practice. Because the way this works is that when you open up the exchange platform to actually go and purchase it, where you actually send the money to purchase the Bitcoin, you have to tie your wallet to that exchange platform. So that way, when you purchase it, it immediately goes to your wallet address to be properly record kept. And in the case of doing it through an IRA or a 401k, you have that set up correctly so that you can get the good tax advantage savings that come along with going to that. And then with regards to the exchange platform, will they offer other types of transactions that I like? There's not just the point of sale and an exchange for monetary reasons. You can also have something where you trade on trading margins, or maybe you want to have an option, the right to purchase or sell a given amount of Bitcoin for a certain price. That might be very attractive for people depending on which direction they are betting that the value of Bitcoin will go. So there are certainly providers out there with regards to the brokerage aspect that can give you a large variety of options on that, and not options with regards to the investment type, but just options with regards to how you're actually investing in it. So look and see what type of things they're offering to you, because that's ultimately going to determine the best way for you to utilize your wallet with that platform and how exactly you would like to exchange or convey those types of assets. And again, different types of trading platforms might have inherent liquidity requirements, so that way you have cash in there to cover the types of trading that you're doing. Just understand that you cannot levy any type of personal guarantee to that type of account. So if you're choosing one and you're setting up the exchange platform, understand that you cannot sign anything that says that you are personally guaranteeing, especially and pretty much exclusively with regards to margins. Understand that you cannot offer a personal guarantee to that. Carol asked, do you know of any of these? Coinbase, BitQuick, and Zappo. Again, I'm doing research just as everyone else is. My main goal is to make sure that the ones that I would give out as a referral would be ones that can specifically work in the naming conventions of an IRA. I have heard of Coinbase, BitQuick, and Zappo, but I have not had the chance to fully go through and make sure that they would properly title a wallet in the name of an IRA, so I can't necessarily speak to the flexibility to use them in an IRA, but I am certainly, as I said, doing more research every day to find those referrals for people to do this. And the main reason I do that is that we can help you save money with regards to this. You might be able to go do this with someone and pay a very high transaction fee and be paying a portion of a very expensive asset just to trade it in an IRA. But when we give you the power to select whom you want to go with and not be tied into just one brokerage platform or one wallet provider, we give you the ability to greatly reduce the amount of money that it costs you to purchase an already very expensive asset. So Carol, I would hope to have more information and a bigger list coming soon with regards to people that do this. But with regards to those, I just don't have enough information to fully answer that question. Okay, a good question from Margaret before we move on past this slide. It's regarding a new type of a cryptocurrency platform. Not necessarily going to put the name out there just because I have not had a chance to do enough research on it. So just understand there's a new cryptocurrency platform being formed, and people creating this without, essentially they are printing money to an extent. And yes, when you do create a new cryptocurrency platform, there is an offering that you're using for the platform, which essentially would be the printing or the initial minting of the new currencies. Now, what I tell people is that they say, well, there's no security backing or what guarantees this. The value that's placed on any monetary unit in almost the entire world, including the United States dollar, the euro, there isn't anything backing it other than the good faith of the people using it and the inherent value that we give it, which is one of the coolest things about this, is that this is real people giving real value to something new. There isn't any type of specie back to the United States dollar since the 1970s, when we removed ourselves from the gold standard, meaning that I cannot go to the Federal Reserve, take in $100 bills and exchange it for gold bullion. I only can exchange it for the good faith that the United States government has to back the validity of the actual currency, which is no different than the actual validity that is offered by the public auditing and proofing constantly of the Bitcoin transactions that are occurring. That's inherently the value that's being added to this, is that people find value in using a more decentralized type of exchange platform with regards to cryptocurrency. So is there a security underpinning to it? Not necessarily, but there also isn't really much security underpinning with regards to tangible asset backing to any type of currency in the world. So with regards to that, there's certainly different aspects to it. It's just regards to how many people are adopting it, using it, and exchanging it is what I would look for if you're going to use something other than, the more entrenched, if you will, cryptocurrency platforms, which the main one would be Bitcoin. Another one we're going to touch base on in a minute would be Ethereum. There's also Monero and Litecoin, and they all have different aspects that make them attractive for different types of people, different types of entities, and different types of trading. Carlton actually puts up a good point. He said, or they said that they opened up a Coinbase account in the name of a non-for-profit, but they need to have a responsible party, and that would be certainly fine. We would just need to make sure that it is certainly titled correctly in the name of the IRA. I just haven't had a chance to fully verify that platform yet, but if we have had experience with someone on here doing that, so I would say certainly if they're willing to do that, we can certainly work with the type of platform if they just want a responsible party, so long as they will name it in the name of an entity. That would be a good rule of thumb. If they'll name it in the name of an entity, but they want a responsible endpoint person, we can typically work with that. Can I buy directly through Advanta, or do I have to set up an IRA and LLC to do this? You can certainly buy directly through Advanta. There might be some perceived advantages you see to utilizing an LLC or a type of subsequent entity underneath of a IRA, such as a trust as well, for maybe a checkbook control type of functionality, but you don't have to do it. You can, and it's a good time to change slides, so long as that you have the wallet correctly titled and then in the name of the IRA, you can do all of the exchange and trading directly through whatever broker platform or whatever blockchain platform that you have selected to broker through. You can do it directly through the IRA. You don't have to go through the additional expense and hassle of doing an LLC or a trust. Can one trade these types of crypto for another? Sure, absolutely. Just like I could give someone a gold coin in exchange for an equivalent amount of silver coins, I could give someone Bitcoin if I had it in my IRA and exchange it for Ethereum or Monero or Litecoin. It doesn't necessarily have to be an exchange to cash. You can do it really any way you want to. If you perceive a certain market trend and you would like to exchange it across another platform for a different type of cryptocurrency, by all means, go for it. What I would say to that effect is that not all cryptocurrency wallets will work with all different types of cryptocurrencies. Most of them that will hold Bitcoin can also do Ethereum, Monero, and Litecoin for that matter. But I would encourage you to make sure, because ultimately if you want to exchange one, you might need to open up another wallet or on another provider in order to be able to have that functionality to do exchange trading, not just trading for US dollar value or what have you, but making sure that you're actually having a platform that can properly encrypt and hold that type of cryptocurrency. And as with anything, make sure you do your research on what exactly it entails to hold that type of cryptocurrency if it's something other than, kind of one of the ones that we're looking at today. So what occurs with my Bitcoin wallet? As I said, when you have the exchange platform, you actually are sending the money to the exchange platform. You are saying how much you want to purchase, just like in a relatively traditional stock market platform. And then once it is actually purchased and that transaction has been verified, remember when you actually put in the order to purchase and then the miners have to go through and hash and verify that transaction, it might take a little while for the actual units to come to your wallet, but once it has been purchased off the exchange that you're using, it is held directly in the wallet. Remember, the glass front safe deposit box that holds all of the actual Bitcoin. or other type of asset. And that is what has to be titled in the name of the IRA, specifically the actual wallet that actually holds the title to that asset. This will also provide, the providers such as BitCo or Coinbase, as someone has pointed out, are where you're going to go for that. The Bitcoin wallet and the actual exchange platform can be two different ones. As I mentioned earlier, a company called Kraken, spelled with a K, is a very large one that is out there that has the ability to trade in many different types of cryptocurrency, so you can do many different types. They also have the ability to utilize many different types of currency on their platform to purchase cryptocurrency. So looking for one that has the flexibility to accept different kinds of money, exchange it for different ones, and also trade in different types of cryptocurrency could be certainly a benefit of what you're looking to do. Now, keep in mind, if you're going to be utilizing a plan other than an IRA, the naming convention for how your wallet is titled, so instead of using Advanta IRA, FBO, John Smith IRA for the owner of the wallet, and by extension the Bitcoin, 401k accounts have actually some different requirements and rules with regards to how that's titled. I would say give us a call if we're your plan provider with how to actually do that and making sure that you're utilizing proper tax ID numbers and things with regard to how that's titled. If you're ever asked for the IRA tax ID number, it's certainly something we can provide to you. But that's also another important thing is making sure, and I can't stress this enough, that the actual wallet where the asset is held, that's what absolutely has to be in the name of the IRA, because that's what validates it. Essentially, one, the money coming from the IRA to the exchange platform, and two, the proper titling of the actual wallet and bits is what creates that valid tax-deferred or tax-exempt growth relationship with regards to this type of system. So with regard to an IRA, you're using the tax ID of the IRA and titling it in the name of the IRA. 401k accounts, as they are trustee-driven plans, which is a presentation all in of itself with regards to 401ks, just understand that the naming conventions are different, tax ID numbers might be different, and to give us a call if you have any questions about it, because ultimately that's really the best place to kind of get some guidance on that, because that's what we have, tremendous amounts of experiences on for you to help you guide you through that. So how do they get from the broker to the wallet? It's a great question, because remember, there are essentially three parts to this whole equation of doing it in an IRA. And we have another question. Okay. Since there's a limit to the amount of Bitcoin issued, how does a company like Overstock that accepts Bitcoin for products reuse its Bitcoins? Will the producing companies eventually own all the Bitcoin? That's a great question. I would essentially think that the market itself would regulate it against that, because essentially if there is no product in the market, the price would inherently fall. So it is in people's best interest to exchange the Bitcoin for other goods and services. Is it possible? Sure. Is it likely? I personally wouldn't see that as a viable possibility, but anything is possible. We have seen tremendous things happen throughout history. So would I say it is possible for someone to hold all of the Bitcoin? Yes, but I wouldn't see the actual motivation for it. So where would they reuse it? I mean, they can reuse it to other companies that do it. They could even settle some of their private debts with it if they had creditors or debtors that wanted to be paid in Bitcoin as opposed to a more traditional currency like United States dollars or euros. They could use it for a myriad of different things. But with regards to them having, for lack of a term, having an overstock of Bitcoin, I would think not. So how does this work with the and I do apologize. We're kind of running right up on our time here. I do want to respect your time. This is the second to last slide before the Q&A. Again, this is all being recorded, so if you have to jump off, I understand. We'll send it out to everyone that registered so you have a recording and the slides for this. But what are the different portions of this? Where do you see one portion interact with another? We have the Bitcoin wallet, which essentially receives all of the Bitcoins purchased from the broker exchange platform. So with regard to the broker and exchange platform, because that's really kind of the first link in actually acquiring the Bitcoin, past actually establishing a IRA or a qualified plan to hold it, When you establish the exchange account, you link the wallet to it. So the unique credentials and addresses that are issued by the Bitcoin wallet link to the broker exchange platform, because when you purchase it, it has to go somewhere. Typically, they're not going to offer any type of dedicated account. There might be a broker an exchange platform that you choose that will actually have wallet services with it, but depending on how they will actually title it, may not actually work with regards to utilizing a qualified retirement plan to do it. So the broker exchange platform is going to be directly linked to the Bitcoin wallet, and that's where the Bitcoin will be held. So think about the Bitcoin wallet as the actual bank account that would hold the actual bits. The cash to purchase the Bitcoin or other type of cryptocurrency comes directly from the IRA. So we, as the IRA administrator, wire funds directly to the broker exchange that you have selected and that you have set up properly with regards to your Bitcoin wallet and everything else. And then that is where you place the trade to purchase the type of cryptocurrency you're looking to have. At which point, once that transaction is verified on the blockchain, the bits will then be moved into the wallet that you have established, again, which typically has about 3 security keys. We need to have proof of at least one of those so we can properly record keep it. And that contains, and the wallet contains all of the specific all of the encryption keys and the specific anonymous information that allows you to hold and trade those bits. All purchases made by your IRA on the exchange platform will be recorded in the public blockchain. This is what ensures the validation, the transparency, and ultimately the trust that is generated on this platform. We got a good question from Mac. How would your IRA mine Bitcoin if it can? I wish I could answer that with more clarity. I do understand Bitcoin mining, but full disclosure, I am not a computer programmer or experienced coder. But essentially, if the IRA, let's say, purchased interest in a company that did Bitcoin mining or otherwise had some type of investment where it allowed it to be experienced in Bitcoin mining, experience some of the profit in Bitcoin mining, that would really be the ways that I see it. The ways that it's typically done is with large computer processing, either with, it started with graphic processing units that could accurately go through and hash and verify the transactions. Now it is kind of shifted on to hardware-specific platforms, so they actually are building hardware-specific platforms that can go in and do this. So without the ability to hold the hardware and actually have hands-on with it, it might be a little tough for an IRA specifically or a 401k to actually perform the Bitcoin mining. But I would be extremely interested to see it work, and we would love to try to help someone do that. I personally think it'd be kind of cool to see. Jack asks, how easy is it to sell Bitcoin? Extremely easy. Once you have essentially set up the relationship with the broker and your wallet, it's as simple as just executing a trade like you would on a foreign exchange platform or a stock exchange platform with that broker. Just keeping in mind that you do need to make sure that the Bitcoin wallet is properly tied to the brokerage platform, and then you would just, once you have that established connection, then you could exchange the Bitcoin or other type of cryptocurrency for either another crypto or a global currency like US dollars or euros. You could do that type of exchange. Keep in mind, if you are wanting to put that money back into an IRA, you do have to exchange it for US dollars. You can't actually put foreign currency into an IRA, but that essentially is where the exchange between government-issued currency and the actual cryptocurrency would occur. And with regards to how quick would it be, so long as there is a buyer for it, it could be relatively instantaneous. Again, the verification of that transaction can take a few minutes potentially, but you're not talking about something that's going to take days to do. It would be very, very quick. And other crypto options as well. We have another question here. Could you buy cryptocurrency with a checkbook LLC IRA, or would you establish a mining operation with a checkbook IRA LLC? I would say you could certainly absolutely buy it with an LLC, a checkbook control LLC, and an IRA. That really wouldn't be an issue so long as the naming conventions and the titling of everything is done correctly. With regards to mining, though, the problem is that there needs to be actual hardware that is doing the operations for mining and verification. So with the rules regarding IRAs, you wouldn't necessarily be allowed to, personally operate some stuff like that, I would imagine. It just kind of gets into a lot of areas where it might not make administrative feasibility or cost basis for you to do it properly. I would say mining probably isn't something that you're going to be very competitive with how much it would probably cost for the equipment and by covering all of the required rules for the IRS and making sure that it is done at least arm's length from yourself personally. So what I would say to that is that mining, whereas theoretically it could certainly be done within an IRA or an IRA-owned LLC, it probably just would be something where that there are so many established large computing centers or people that have invested the time and money to large processing units that it just might not make inherent sense to do it. But is the possibility there? Certainly. So I told you we would get into other types of cryptocurrencies, and we're going to touch briefly at least on some of the benefits or perceived benefits of each one. As I mentioned, Bitcoin, right before this presentation, I checked the spot trading on it. I was trading at $4,221.96. Ethereum listed up here is trading at $300.05 per unit, Monero trading at $47.81, and Litecoin trading at $45.56. Again, that was about an hour ago. I'm sure they have fluctuated, but it just kind of gives you an interesting cross-section of what some of these are exchanging for in US dollars. Now, whether or not that is something that would attract you to one type of cryptocurrency over another, I would encourage everyone, do your own research, make sure it's a good fit. Obviously, the cost and actually what it is typically used for is going to make the most sense as to whether or not this is a good fit for an IRA as an investment. Bitcoin is kind of the first to market. That's essentially its biggest claim, in that it actually established the generally accepted practice of cryptocurrency with transaction verification through a centralized, transparent blockchain. Now, it does rely a lot on third parties like brokers or people that are actually going through and facilitating the actual transaction, which of course, they're going to be transaction fees assessed with that. So that is one thing that is certainly something to watch out for with Bitcoin. Ethereum, or commonly referred to colloquially as Ether, so if you look out there, it's either going to be referred to as Ether or Ethereum, one and the same. They have less reliance on third parties with regards to how it's exchanged. It's a little bit more person-to-person with Ethereum as far as what I've researched and looked into and how it works. So for some different types of industry, it might make a lot of sense. For an IRA, I don't necessarily know that it would make too much of a difference past that it is just trading at a lower dollar value currently, which might make it a more attractive option to get into, as it is slightly cheaper. Litecoin essentially is kind of a similar basis to Bitcoin. It's a very similar platform that was developed. It uses the exact same verification structure as Bitcoin. There are inherently differences with regards to that do make it a standalone type of product, but just understand that it is a relatively similar product to Bitcoin with less of the aspect of the person-to-person and ability to have non-third parties involved in trading contracts as with Ethereum. And Monero is something that focuses basically a lot on anonymity. So for people that are extremely concerned with anonymity, Monero is something that offers a lot of that. So whereas all of these are essentially the same in that they are all cryptocurrencies, the ultimate reason for having it, using it, might be vastly different between each one of them. Okay. Margaret, I would say with the last question that you asked, give me a call if you want to review that. I don't want to throw too much of a wrench in the path of the presentation, but give me a call this afternoon. We can review that, and you'll have my contact information here in a minute. Okay. So now I would say if there's any other questions and answers, please do feel free to give me a call, but that's pretty much it today. We do have a recording of this, and I would encourage you, if you do have any other questions, to give me a call. We are always happy to work with you. And if there's something new out there you want to get involved in, we're always happy to look at it individually and try to help you make sure that it is valid and verifiable for an IRA to be involved in it, so you can get those great types of of gains in it. Let's see. John asked, can RIAs work with an Advanta IRA? With regards to that, I would say certainly. With regards to how registered investment advisors could work with us if they are operating with advisory services, we're always happy to look and work with other financial professionals. Give me a call. We'll kind of discuss that on a case-by-case basis. But I do appreciate you asking that question. Feel free to reach out to me directly.